If you have a spare $1,000 that you won't be needing in a while, say a year, and you plan to go into investing in stocks, but don't know how or where to begin, then this video is for you. But before that, please like the video and click on the subscribe and bell icon whenever you feel like it throughout the video, as this is the best way to help the channel grow. Thanks a lot, my friend. So, you have $1,000 and have chosen to invest in stocks. How do you go about it? For this video, we will look at 3 impressive stocks that are best to solidify your place in the stock market and grow your $1,000 to more in just a year. How much do you think your $1,000 will be able to make for you? You can write that down somewhere. And at the end of the video, compare it with what you would have made if you followed the following steps. And also feel free to share with us in the comments section. We would love to know the differences. The first stock you will be getting, and probably the most expensive, is Apple stocks. Because of its price, we won't be getting much, so 3 will do. At the time of producing this video, Apple stock had a stock price of $168.48, and 3 would cost $505.44, leaving us with $495.56 from the $1,000. Apple stock, unlike most stocks in the market, has achieved impressive goals after retaking the stock 50-day line. This came after it took a short halt following its experience of a sensational run that increased stock's growth 11 sessions in a row, a feat that shows that the stock is performing better than other tech stocks during the stock market pullback. With a composite rating of 95 out of 99, it is no doubt that Apple stock is a good buy. After their first quarter earnings in 2022, Apple stock prices soared as a result of an increase in the stock's revenue, which in fact happens to be Apple's best quarter in the aspect of revenues. According to the Wall Street Journal, stock analysts and investors on Wall Street believe that Apple will experience 10% earnings growth in 2022, which would increase in 2023 by 7%. Meanwhile, revenues for Apple are driven by 2 strong drivers: wearables. Apple services range from Apple Store, Apple Music, iCloud, Apple Care, Apple Pay, Apple TV, and other offerings including the Apple Arcade. Remember that in September of 2021, Apple Services revenue rose by 26% in their year-on-year growth to more than $18 billion. Imagine if the same scenario happens in the same month this year. That is a lot of increase. There are lots of prospects for Apple stock prices to rise. For instance, there is a notable low-cost 5G iPhone SE Apple plans to retail for just $429. There is also speculation about self-driving electric cars, which are expected by 2025. So, in summary, the reasons Apple stock will gain in value range from the company's solid fourth quarter results, the increase in revenue which beat analysts' expectations and rose to $123.9 billion, and an 11% increase in year-on-year growth. There is also the fact that Apple's stock earnings per share grew by 25%, beating investors' expectations to settle at $2.10 earnings per share. These features put in place will drive Apple stock prices high. But how high and how much do you stand to gain on your stock by next year? Disregarding recent volatility, Apple stocks have a relatively high valuation when it is being compared to the tech industry average. According to Gov Capital analysts, before the end of 2022, Apple stock might hit the $200 per share rate and even surpass it to $260 per share. This will turn your $505.44 into $780, which is an additional $274.56. Impressive, right? Another interesting stock to add to our list of stocks with $1,000 is the Walt Disney stock, which at the time of producing this video sold at $130.92, and buying 3 will cost $392.76. From here, our $1,000 is left with $101.80. But why should we invest in Walt Disney when there is Netflix? Most importantly, Disney has not experienced the enormous 20% drop Netflix has seen in the past few trading sessions during the production of this video. Although Netflix has a bullish target, a beginner buying Netflix for just $1,000 sounds pretty much like an example of a very bad investment. Walt Disney is a company that is a household name with several means of pulling in revenues like Disney World, Disneyland, and Disney Plus, which is created for most millennials who prefer to stream entertainment. There are several reasons why investing in Walt Disney stocks will benefit you. As a result of the pandemic, Walt Disney theme parks, cruise lines, and hotels struggled to survive. But as they are opened, their demand is likely to boom anytime soon. This will lead to a very significant rebound that is geared towards increasing the stock price. That aside, streaming entertainment is one key driver in boosting Disney's stock growth. As of November 2021, the streaming entertainment space had more than 118 million subscribers, which was more than the 86.8 million subscribers it had in 2021. These numbers are expected to grow by November 2022. Stock analysts are in love with Disney stocks, holding it at very high price targets for 2022 alone. Lately, news around Disney stocks makes the stock a very good part of any investment portfolio, even for beginning investors. The news is, in a way, all thanks and tied to the release of the company's earnings report for the first quarter. From the diluted reports, it is evident that the company has experienced remarkable expansion from that last year. Take, for instance, earnings per share of Disney stock, which rose to a high of $1.06 from the 32 cents of last year's report. And if you think that wasn't impressive, then the fact that it beat the forecast made by a consensus of analysts pulled together should. It didn't just beat the forecast, but almost doubled it. While analysts were expecting a 63-cent earning per share, the company pulled in $1.06 in earnings per share. Also, Disney's first quarter reports showed another impressive growth in its revenue, which rose from $16.3 billion earned in the same quarter last year to a whopping $21.8 billion, about a $5 billion increase. This report was indeed robust, and it helped to push the price of Disney stock. Although this wasn't very large, a 4 to 8% increase is a big deal for investors, especially when the stock is one of the well-performing stocks thriving and trading on a day when inflation is red hot, with consumer inflation data settling at an annual estimate of 7.5%. This is one of the highest recorded inflation in all of the United States for the past 40 years. About 25 bank analysts have estimated Disney stock to increase by 25.58% of the stock's price at the time of producing this video. This is according to CNN Money, which further elaborated on the bullish outlook of Disney stock and how it reflects a consensus of buy polled from 29 investment and institutional analysts. In predictions by GovCapital, Walt Disney stock before the end of 2022 is expected to grow as high as $196.35 per share, which is more than 40% growth from its current price at the time of producing this video. If the stock within 6 to 8 months can experience a 40% growth, imagine how high it will go in a complete year or more. Although it is expected to end 2022 with a $196.35 per share, predictions from GovCapital expect the stock to hit $261.46 in the year to come. With that, your initial $392.76 has almost doubled to $784.38, which is $391.62 more than you invested. The next stock on our list to buy with the remaining $101.80 out of the $1,000 is the Pinterest stock, whose price at the time of video production was $23.58. Let's agree that we buy 4 of these stocks at a total of $94.32. We have $7.48 left. But why Pinterest? Pinterest went public in 2019. It offers its users a platform to uniquely share and learn about designs and decor, travel experiences, recipe ideas, and a lot more. Although right now the stock might seem like a tough bargain, it remains a solid buy. Pinterest has a very strong revenue growth, which is set at 52.13%, and it is, in a way, different from most stocks. But since the IPO of the Pinterest stock, it seems like the stock has experienced some kind of roller coaster in its price. It is almost, if not always, present in most big tech stocks, as they experience some ups and downs in their early years of going public, almost like it's an invisible rule they have to abide by. But for Pinterest, the roller coaster experience has been a lot milder, as they have steadily climbed. Mind you, there might be plans that Pinterest monetizes its platform because at the time of producing this video, the platform holds lots of potential, which is amazing, and when tapped would increase the stock price of the Pinterest stock by increasing its revenue. However, we have one big problem: knowing when Pinterest would do this. But whether or not they do, investors and analysts still hold the stock in a good light and consider it a good fit for a beginner stock investment portfolio. The social media and visual discovery engine, Pinterest, at the time of producing this video, was valued at almost $15.23 billion, which is quite different from the market cap during the last quarter of 2021. However, the company showed an increase in its sales, which rose from its 2018 sales of $755.9 million to $2.57 billion in 2021. This figure is expected to increase in the same quarter of the following year, and if it should play out in the same pattern, then we should all look out for a 50% increase in the company's sales. Don't forget, we already mentioned that the company boasts of its above 52% revenue growth rate. According to a source from MyWallStreet.com, investors and analysts greatly expect Pinterest's total sales revenue to be $3.14 billion by the end of 2022. This is a 22% increase from 2022, and by 2023, it is expected to increase by 27.7% to $4 billion. While investors and analysts rally behind the stock, the company is doing all within its power to boost its revenue. It plans to improve its user engagement on its platform by the introduction of the short-form video formats, which can also be used to boost the shopping intents of its users. When this happens, the company would have successfully added value to all its stakeholders, as advertisers would work on targeting its customers with higher interest. There's also the possibility of Pinterest stepping up its game to include augmented reality components for user engagement. This would improve and expand the company's active users in a month, as well as increase the company's top-line growth. For Pinterest, an analysis from Capital.com expects the stock price to go to its lower tens before soaring up to an incredible height. Although GovCapital expects the stock to hit $100 before 2022 runs out, it might hit $126 in the last days of April 2023. Our $94.32 spent on buying 4 of the company's stocks rises to $504 by next year, which is an additional $409.68 to your initial investment. This is indeed a good buy. Now let's look at the combination of our investments. But do not forget to never take this as investment advice. This is not a prediction. It is for entertainment purposes only. This is not something I'm saying will happen for certain, of course. Also, remember to never invest money you can't afford to lose. So, with just $1,000, by investing in those 3 stocks, we would have made a profit of $1,075.86, according to our sources. Isn't that amazing? How much did you expect to make from your $1,000 investment? Do well to let us know in the comments section below. If you liked our video, then go ahead and click on the thumbs up, subscribe, and the bell icon to get notified of our new and upcoming videos. You can also check out our other videos. Goodbye!